Exactly.
Perfect. So, kind of delving into more of these insurance-based questions. So, you're going to have to guide me along. This is definitely not my forte. So,
Okay.
what is mortgage insurance and why is it required in Canada?
It's a really good question, and I think the question and the answer is a good indicator of why people tend to be so confused about the topic of insurance.
Hmm.
And so, in some of my intellectual material that I publish, I say, there's mortgage insurance and there's mortgage insurance.
Right.
What's the difference, right? So when we're buying a piece of property and we have less than 20% down on that piece of property, Canadian Mortgage and Housing Corporation determines that we have to buy mortgage insurance. And it's interesting insurance because the buyer is paying for it to protect the lender.
Hmm.
And it's required to have if you have less than 20% down payment.
Right.
And they calculate the premium based on how much you are short in between that 0 down and 20% down, and then they add it to your mortgage. So you're actually not only paying the premium for that, you're paying the interest on the amortized mortgage that you have, which is kind of crazy, but it's one of those things where the people who create the rules get to dictate the rules. Now, what the real mortgage insurance genius does is recognize that once a person purchases a piece of property, whether it's their residential property or if you're a business owner, you buy a commercial building, or if you're a farm agricultural contributor to our economy, mortgage on your farm. Most people are concerned that if they die, become disabled, or become critically ill, that they want the mortgage dealt with or funded to be dealt with by the beneficiaries of their policy. So the type of mortgage insurance that I specialize in is the latter. It is the insurance that a person buys to protect the investment they've made so that their family can continue to reside in that home, or the business can reside in that business, or the farm family can reside on that farm even if the insured person passes.
Gotcha. So I guess while it's probably maybe not set up in the greatest way, it probably is a bit of a necessary evil to, I guess, protect families, business owners, et cetera, in the event that someone passes away, probably most notably in a time that was not expected, and you're throwing that family for a bit of a loop. So I guess there's probably some pros and cons to it, and I guess we'll probably get into maybe how you can structure that life insurance in a better manner to, get the same benefits, but maybe not have some of those same downsides that you kind of mentioned there earlier.
Exactly.
Right on.